Globalism is the idea that emphasizes the interconnectedness and interdependence of countries in politics, economics, and culture. It involves the integration of national economies through trade, investment, and technology, leading to global supply chains and international financial markets. Culturally, it encourages the worldwide exchange of ideas and practices, creating similarities in lifestyles across different countries. Politically, globalism promotes the importance of international cooperation to address global issues like climate change and security. While globalism is often seen as a way to foster cooperation and growth, it also has critics who argue it can undermine national sovereignty, lead to cultural homogenization, and increase economic inequality. The term globalism is used offensive by some movements and conspiracy theorists because they see it as a threat to national sovereignty, cultural identity, and economic security. These groups believe that globalism undermines their nation's autonomy by giving too much power to international institutions and elites, dilutes cultural heritage through the spread of foreign influences, and leads to economic insecurity through free trade and outsourcing. Additionally, some conspiracy theorists view globalism as part of a plan for a new world order that subverts national governments and individual freedoms. This fear is compounded by opposition to immigration, which they associate with globalist policies that they believe disrupt social cohesion and change the demographic makeup of their country. So globalism is not just about countries working together, it is also about setting up a system where the global economy could keep running smoothly without too much interference from governments that might want to prioritize their own people's needs over the demands of the global market, their productive capacity, the exploitation of natural resources, and impoverishment. This perspective helps us understand why some people see globalism as beneficial for business, but potentially limiting for individual countries' ability to make decisions based on their own priorities. The carbon tax is a revenue-generating tool that encourages businesses and consumers to reduce their carbon footprint, potentially spurring innovation and economic growth. Governments can use the revenue for investments, reducing other taxes, or supporting social programs. However, it can also increase costs for consumers and businesses, disproportionately affecting low-income households in certain industries. Revenue from the tax can be volatile, especially if emissions decrease, making long-term planning difficult. Additionally, businesses in regions with a carbon tax might face competitive disadvantages, potentially leading to relocation and economic harm. In this sense, we must take into account what a negative externality is and how it influences the economy. A negative externality is a cost imposed on society or the environment that is not reflected in the market price of goods or services, such as pollution from a factory. It is generally bad for the economy because it can lead to inefficiencies and social harm that the market does not account for. A carbon tax can benefit the general population by internalizing these external costs, encouraging businesses and consumers to reduce harmful emissions, and funding public initiatives that improve environmental and social well-being. We cannot create wealth where it doesn't exist, so we must allocate resources more effectively and carefully consider how these taxes impact society. This means that instead of trying to generate wealth artificially, we should focus on using the resources we have in the most efficient way possible. When implementing taxes, such as a carbon tax, it is crucial to evaluate not only their ability to generate revenue, but also their effects on resource distribution and social welfare. A responsible approach to fiscal policy involves designing taxes that not only raise funds, but also promote a fairer and more efficient allocation of resources, minimizing negative impacts on the economy and different segments of society. This is especially important in contexts where resources are limited and must be used in the most effective way possible to promote sustainable growth and social well-being. However, good governance is a critical component of this process. Effective allocation of resources can only be achieved in a system that prioritizes transparency, accountability, and integrity. Corruption undermines these efforts, diverting valuable resources away from essential public services and infrastructure, and eroding public trust in institutions. It is essential that leaders and public officials are held to high ethical standards to ensure that funds are used appropriately and for the benefit of all citizens. In addition to combating corruption, the government must prioritize investment in key areas such as defense, health, and education. A strong defense ensures national security, allowing the country to focus on development and prosperity without the threat of external or internal conflicts. Health and education are equally crucial, as a healthy, well-educated population is the backbone of any thriving economy. In conclusion, good governance free from corruption, combined with strategic investments in defense, health, and education, forms the foundation of a prosperous and equitable society. By prioritizing these areas and ensuring that resources are allocated effectively and fairly, we can foster sustainable growth, enhance social welfare, and create a more just and resilient nation without beneficiaries at the expense of others.